Hi, everyone. This is Sam Silverman, Managing Partner of EB-5 Affiliate Network. Thank you for taking some time to join us on today's webinar. Today, we're going to be speaking about partial EB-5 investments in our Wahali, Utah rural EB-5 project. During today's webinar, if you have questions, please use the chat box, and we'll try and cover as many questions as we can at the end of the webinar. If you need to leave early, or if you're looking to review a part of the webinar at a later date, you should receive an email with a link to a video recording. And if you'd like a copy of the slides, you can also send us an email at info@eb5an.com, and we'll be happy to send you a copy of the slides. Okay, so to get started, first, we have several top EB-5 immigration attorneys who offered to share their time and expertise with us today. But this presentation is not legal advice and is for informational purposes only. So you should always consult with your own EB-5 immigration counsel before making an investment decision and doing an EB-5 application. As I mentioned earlier, I'm Sam Silverman, one of the managing partners at EB-5 Affiliate Network, joined today with my partner, Mike, and I'll let Mike jump in and introduce himself and share a little bit about the genesis for our company.
Thanks, Sam, and really appreciate everybody that's taken some time to join us today. So I'm Mike Schoenfeld, bio's on the right side of the screen. Prior to founding EB-5AN almost a decade ago at this point, I was with a large private equity firm, AEA Investors, and with the Boston Consulting Group before that. Sam and I met each other at BCG when we were working there, and back in 2012, we saw that the EB-5 industry was not as institutional as we thought it could be. Some of the projects weren't meeting what we would expect in terms of immigration and financial safety. So we came into the industry, and our goal has been to provide best-in-class projects that minimize immigration risk by ensuring that all jobs are created, and minimizing financial risk by partnering with high-quality developers and institutional projects. And since then, we've worked with nearly 2,000 investors from over 60 countries.
Great, thanks, Mike. So as I mentioned earlier, today we're really privileged to have 3 top EB-5 immigration attorneys with us today. These attorneys are all leaders in this space, have worked with hundreds of EB-5 investors over many, many years from countries all around the world. And so without further ado, we'll go left to right and let Rohit introduce himself and share a little bit about his background in this space. And once we finish the introductions, then we'll jump in to the content for today's webinar.
Thanks, Mike. Mike and Sam. So pleasure to be here, guys. My name is Rohit Kapuria. I'm a partner at Saul Ewing, Arnstein & Lair. We are a large national firm with 450 attorneys, 17 different offices. My specialty is on the EB-5 side, both on the corporate securities as well as the project immigration side. But specifically with respect to investors, I represent a significant portion of investors from India and from the Middle East, as well as West Africa. And it's certainly a pleasure to be sitting alongside our co-panelists here. These are individuals that are much more experienced and far smarter than I am. So it is a privilege to be here. Thank you.
Those were some really kind words, Rohit. Thanks for having us, Sam and Mike, again. My name's Anita George. I'm a partner at Just Immigration, based out of Seattle, Washington. My background was in tax and accounting. Spent a couple years at Big Four accounting firms. That's how I got started in immigration law. We're a boutique firm with 7 attorneys, 3 partners, and just like Rohit, we specialize in Indian source of funds, as well as handle a lot of H-1B clients. Happy to be here.
And my name is Mitch Wexler, and I agree that Rohit was very generous. He could attest that I asked him more questions than he asked me. So he was being a bit humble there. So I'm a partner with Fragman, which is a large worldwide immigration law firm. We have about 55 offices and about 6,000 employees. And my remit is Southern California. So I oversee the firm's offices in Los Angeles, Irvine, and San Diego. And in each of those offices, we have robust EB-5 teams. Most of my EB-5 practice also involves India and the Middle East, and then a smattering from all over the planet, but mostly in those general regions. Thanks, Sam.
Perfect. Thanks, Mitch. We've got a few German investors too. Don't forget about them. Okay, quick overview on EB-5 affiliate network. As Mike mentioned, we're a national EB-5 regional center consulting firm and investment fund manager. We've worked with over 2,000 investors from more than 60 countries since 2013. This is a map, a little bit out of date now, that shows where many of our investors have come from over the years. And now we're going to jump into the meat of today's presentation and chat about partial EB-5 investments. What is a partial EB-5 investment? How does it work? And how does it work in the context of the Wahali Utah rural project that's now open? So quickly about Wahali Utah, it's the 15th EB-5 affiliate network managed EB-5 regional center investment fund. Follows 14 prior successful regional center investment funds that we've worked on over the past 10 years. A little bit specifically about the project. It's located just outside of Park City, Utah. It is a rural TEA, which means that it qualifies for both priority processing. So the I-526E petition itself will be adjudicated faster. And it also qualifies for a 20% visa set aside, which means that you will likely be able to avoid any potential visa backlog, particularly important for investors from China, India, and Vietnam, who in the past and likely in the future, are expected to experience additional waiting time to actually collect the green card after the I-526E petition has been approved. The project itself is a development of residences surrounding 2 golf courses and other upscale amenities. Project's been under construction since 2020. It's a secured EB-5 loan style investment. It's a rolling 5-year term, which means that as investors invest their capital in the project, there's a miniature 5-year loan in place for each investor. So the repayment day will vary, assuming investors join the project on different days. Phase 1 lots for the project is nearly sold out. They have an executed senior construction loan for $50 million. It's already in place and funded. And since construction's been underway for about 2 years, there's already more than 300 EB-5 jobs already created through bridge financing, which means that the first 30 investors in the project will essentially get the 10 jobs automatically. And so the green card, permanent green card approval risk has been reduced for those investors. Okay, now shifting over to partial investments. So, before we do that, quick construction update. Here are a couple of photos of recent construction activity on the project. And just this past weekend, me and Mike and Mitch, who's not pictured here, were able to visit the project in person, get a full tour, spend the day there, which was really exciting to see what's happening and all the exciting progress that's being made. And if any of you are interested in visiting the project, we strongly recommend it. We already have a number of clients who have made arrangements to go out and visit and meet with the Sotheby's on-site team. And we're happy to arrange for that if you're interested in going out and seeing it in person. Okay, so to quickly paint the picture for partial investments, and then I'll let the experts jump in and give us the full context. So USCIS does allow EB-5 investors to file Form I-526E with an initial partial investment. This is not something new. This has been in place prior to the new laws, but under the new rules, it is more specifically detailed in the I-526E form. So policy summary on the left side. So what does it mean? Investors can put in part of the money day one, and then they can fund the remaining amount by a future day. The government doesn't specifically say what that future date is, but general kind of practice, and if you ask most attorneys, most people agree that 12 months is kind of the maximum amount of time that you'd want to show the rest of the money going into the project. What is the actual rule or statute that allows this to happen? That information is here on the right-hand side highlighted, right? So actively in the process of being made with respect to the investment, and in the actual rules, actively in the process of investing. And so what that translates to is you can put part of the money in to start and clearly demonstrate a clear intent and a path to completing the entire investment within a defined period of time. So to start, the first question that kind of comes up related to these partial investments, right, is, well, how do I make sure that I've clearly documented where the rest of the money is coming from to make sure that this is approvable, right? How do you make sure this works? So to start with that, Rohit, do you want to comment, and then Anita and Mitch, and then we'll jump into a second question.
So Sam, just to be clear, in terms of how the investor proceeds, or can you be more specific on the question?
Yep. Let's or I guess before we get into the more granular points, just tell me generally, how many clients have you worked with that have done partial investments, and and why, and how do you imagine it's going to look on now that the new rules are in place?
Sure. So in terms of numbers, I think over the years we've probably had somewhere around 60 to 70 investors that have gone the route of the partial. Certainly partial was not as common in the heyday. So this is pre-2019, before the investment amount increased. But as the investment amount increased, the challenge for a number of the investors that I work in particular with was not that they had trouble with liquidation of the capital. It was more with respect to remittance of the money, given their various country cap on the remittance restrictions. And so in certain circumstances where we were past the fiscal year where the investor was unable to wire the balance of the money post-liquidation thereof, they would get into an agreement with the issuer, the EB-5 issuer, that articulated when, how, at what rate, and what the terms and conditions of the subsequent investment would be. And what we generally do in that circumstance, at least the way I like to do it, is we ended up sourcing the capital, providing updates to USCIS within the initial I-526 back then form, and articulating with a level of specificity where the balance of the money was going to come from, alongside any agreement that the investor had entered into with the EB-5 issuer. And we've never really had any pushback from USCIS on that issue, unless the source of funds was changed.
Got it. Okay, Anita?
Yeah, I agree with everything Rohit said, especially dealing with India. The $250,000 RBI cap was an issue when the amount went up to 900. Yeah, we had to wait for the fiscal year to change. I have also had transactions where real estate is up for sale, and we document that the property has been listed and the valuation for the property, and kind of saying, hey, look, we're in the process of trying to make this sale. But I agree with Rohit. We have not experienced pushback, but I feel like we have also not been as specific as we're required to be going forward, where you're basically required to provide a date for remittance. So I think that the rules have changed a bit with the updates in the forms.
Got it.
Yeah, this is Mitch. So yeah, we've probably done a couple of dozen partial investments over the years, only because we reject more requests for partial investment scenarios than we accept, only because we're pretty conservative, and we want to make sure what we file is going to fly, especially for the Indian investor applicants. As Anita mentioned, they have the remittance limitation, so that's an easy one to comply with. We've also done partial investments in scenarios where there's real estate that's in escrow already. So it's important that the asset exists, because remember, these applications have to be approvable upon filing. It doesn't have to be fully funded upon filing, but approvable on filing. So I've had one recent client say, you know, for the last 10 years, I've been getting significant year-end bonuses, and I fully expect it this year. It's not guaranteed, but I fully expect it. So that's a scenario where we weren't comfortable with it because the asset or the funds don't exist today. Because what has to be provided with the 526E is an irrevocable promissory note secured, and it's got to be attachable in the event of a default. So an asset has to be there and specified in detail in the note itself as part of the source of funds package. So the full 800K needs to be sourced, but the full 800K doesn't need to be funded at the beginning.
And I think that's really helpful. And I'd say one thing let's really dive into is, so what makes a good partial investment case, and what are some things, and we'll let each of you kind of run through some things off the top of your mind that make a bad partial investment case that you would not take on.
And for this one, let's start with you, Mitch, and then we'll go back the other way.
Yeah, I'll just reiterate the one that I mentioned that included future earnings. That's not guaranteed. That's a bad partial funding case. As long as the asset exists, and either you're waiting for loan documents, if you're going to take out a loan against the equity that you have in that piece of real estate or that asset, whatever it is, stock portfolio, whatever the case may be, those are good. And it's the valuation of the asset at the time. So not a future valuation, obviously not a past valuation. So as long as the asset exists, it's probably going to be a good case. But just because it's a good case doesn't mean it should be pursued if they can liquidate and fully fund at the beginning. Because we don't, it's kind of a race, especially if the applicant's going to use Wahali, which is a rural project that's going to get priority adjudication, a term which hasn't been defined. But who knows? Maybe the 526 will be adjudicated in 6 months or so. And if the plan is, or the expectation is to liquidate and be able to fully fund in 10, 11 months, that's probably going to be too late. So you have to kind of figure out if it's going to be worth it to fully fund in such a short period of time. If you have it through other means, it's probably the better way to go.
I will piggyback on what Mitch said, especially seeing what the Canadian clients are experiencing. The banks are quite slow in lending. So I think that I would be quite comfortable if the loan process is started and I have loan documentation and a collateral exists for the loan. Pretty comfortable taking a case on where I'm saying, hey, we're in the process of acquiring this loan. We're good to go, because in Canada, it takes 6 to 8 weeks. I've had clients that have some liquidity that are willing to invest. I have had bad cases where clients will come and say the stock market's down. You know, the value of my stock options is $100,000. A year ago, it was $250. I know the market will recover. Well, that valuation will not matter, because if the valuation today is 100K, well, that's what we're going by. So if it doesn't cover the gap, you have a problem.
Got it. Rohit?
Yeah, I think I agree with both of what Anita and Mitch have said on this level. Generally, the issue ends up being, sourceability and material change. So what the investors have to understand is, when we apply for the case, and going what Mitch mentioned, approvable when filed, we want to ensure that what we present to USCIS at first blush is what we are continuing to stay in terms of on the trend. If we end up having to change things, as Mitch also gave the example of future earnings, then we are potentially asking for trouble because those earnings may never come to pass. But if it's something where we are confident, as Anita gave mention on a loan that's probably taking longer, that seems pretty certain and we should be able to go there. But the bottom line is, if you can fund the entire amount, go ahead and do that. And don't sort of try and time the market with, well, I can put $400,000, I'll earn an extra, 2 points, 3 points in a fixed deposit, and then I'll fund the balance. That's just not worth the headache and the substantive delay that's going to occur with processing your case.
Got it. Okay, so to quickly summarize, the kind of best case is going to be, someone who owns their home, maybe they don't have a mortgage on it, but they have substantial equity in the home. They can demonstrate how they bought the home, but right now they only have a few $100,000 in cash, but they don't want to wait to either sell the home or take a mortgage, and they want to get started with the investment process now. That seems like, kind of a better, more solid case to consider exploring. And on that note, let's talk about why an investor would want to do this, right? What's the benefit of getting the immigration process started now versus waiting that 6 or 8 months or whatever, 6 or 8 weeks, months, whatever that period is, until all the money actually shows up, right? So if you could file today with a partial, or you could wait 7 months before you had all the money, why would you want to file now instead of in 7 months? And for that, let's start with Anita and then go to Rohit and Mitch.
I have noticed the urgency to file with H-1B holders, specifically considering the economy. The layoffs have started at big tech companies here in Seattle, whether it's Amazon, Microsoft, Google, Walmart. We've seen a bunch of layoffs. I've seen H-1B holders that have equity in their homes, have these stock options, have cash sitting, trying to apply as soon as possible so that they can get their work permit in before they have to go job hunting. So they're basically considered in status. And so far as India is concerned, it is definitely, locking in the earlier priority date. That being said, I have warned clients that I don't know, this could be adjudicated in 3 months. I've had a case that was from India adjudicated in 6 months, Sam, where you and I worked on the business plan, and then they were forced to fund that amount immediately. So I would definitely be wary of that.
Got it. And Mitch, when you jump in, talk a little bit about the EAD and the concurrent filing, and how that's a feature under the new rules.
Yeah, it's what comes to mind with this question. In addition to representing H-1B EB-5 applicants, F-1s, so it's really advantageous to an F-1 to, by the time they graduate, although they may get 1 or up to 3 years of OPT, which is an employment authorized status, it's really valuable to them to have a work permit in their pocket when they graduate. That'll just open them up to a broader array of potential job opportunities. So just to get that EAD clock ticking with a concurrent filing, so the 526E concurrently with the adjustment of status application package, which includes a green card application for a work permit, and an application for travel privileges known as advanced parole. So right now, we're seeing the EAD, the employment authorization document adjudication time, slowly come down. It was taking 10, 11 months. Now we're seeing 8, 7, recently got one in 5 months. So if that trend continues, I'm setting expectations at maybe 6 to 8 months from filing concurrently for someone in the United States. So just getting that EAD is extremely valuable to whether you're an H or L non-immigrant status.
Got it. And Rohit, can you elaborate a little bit more on, on the value of that? Like if someone files now, they adjust status, and then, whoops, they're at Amazon and they get fired a month later. What is that person, what are they looking at in terms of immigration and work options, if that did happen to them?
Well, absent the issue of trying to deal with an H transfer case, if applicable, there is just what I've noticed with some folks is the flexibility. They appreciate the flexibility that they have. It also gives them at certain times the opportunity to take a break and reevaluate what they want to do, as opposed to immediately pounding pavement trying to find a new opportunity that's within this specific sector. Maybe they do want to change their process in their career altogether, and having that EAD gives them a little bit more leverage to do so. So at the end of the day, this is for someone who is here, it's particularly important to have that, and it's a great benefit. For somebody who is abroad who doesn't have that opportunity to adjust, then at least they're counting their place in line, they're planting their flag. And to the extent, as we're dealing with the rural case, where we're all anticipating on the basis of the legislation that rural is going to be prioritized and it's going to be faster ahead of the queue, there will be the opportunity for them to come here sooner rather than later.
And I think that's a great point. And we've really been focusing on a lot of the H-1Bs and people within the U.S. and some of the Indian source of funds issues. But another big category where I think the partial can make a lot of sense is investors from, let's say, China and Vietnam, or places where there's currency restrictions, where the money may be available, but it takes some time to arrange for the transfer of funds and making sure that you have all of those documents in place. So I know it's still relatively new, but have any of you started to see those types of cases where it's much more of the out of the country, but the transfer of funds due to currency control issues?
Yeah, we have, Mike. It's the currency restrictions are always a big deal with the countries that you've mentioned. The fiscal year in India is at the end of March, so they get a new allotment April 1st. So we're always dancing around, getting your allotment out in March, and then another one in April. So yeah, that's always a big driver for interest in partial investments.
And one of the other things is that, I'm sorry, go ahead, Megan.
Yeah, I would say that the workaround for H-1B holders for that is that if you're in the US, you probably have an NRE/NRO account in India, which then has $1 million limitation. So I think that if that exists, you can overcome the $250,000 cap.
Yeah, for an Indian living anywhere other than India.
Correct.
Right. Mm-hmm.
And Rohit, how does this benefit translate over to Canadian clients? Because lately we've seen a real uptick in clients from Canada, and with the ability to come to the US, stay for 3 or 4 months, and then adjust status. How can you talk a little bit more about that, and how this could be advantageous for someone like that who maybe is moving and is going to sell their place eventually, but they want to come here sooner than later to get kids in school, etc.
That one gets a little tricky, right? So there certainly is an ability to come here and post a time period of stay if should things change and your lifestyle change and your decision, and it becomes a new plan altogether. So your initial entry was not deemed to be a fraudulent one, then yes, you do have the ability to adjust your stay. That notwithstanding, when you're coming in, you do have to come on some sort of status. So you cannot rely on the fact that you have a Canadian passport and you have a waiver to enter. You should actually come in on a B1, B2, or some other form, non-immigrant status form that will allow you to do that, to stay the full 90 days. But for those who happen to change their plan post-entry, the fact that they're here, they're close to home, they do have the ability to adjust. But the one important facet of that, as we've discussed in a prior webinar, is they should prepare to be locked in the US for some time period. As Mitch mentioned, the EADs are coming out faster, and we are also seeing that 4 to 6 month time frame. The fastest I've actually gotten of late was 3 months. But in those scenarios, the travel, which is the 131, does not seem to be the priority. And so it is an important consideration that in most circumstances, somebody who does enter is probably going to be landlocked within the United States for about a year before they're able to travel abroad.
Yeah, it's real important to set that expectation, Rohit. I agree. There are some non-immigrant statuses that you can travel on while adjustment of status is pending before the advanced parole comes in. H's and L come to mind.
Correct.
But in the scenario that you just went through, Rohit, you're right. If it's just a Canadian coming down as a visitor, circumstances change, they file the adjustment of status package, they're going to be a hostage in the U.S. until that advanced parole comes through. You're absolutely right.
And how just kind of big picture for those of us who aren't experts on the employment authorization on the EAD, Mitch, what does that really mean? Like, you have the EAD, what are your employment options compared to a US citizen? And like, can you now just essentially stay and wait in the US legally until you get the green card? Like, what does that actually give you in terms of flexibility for work and then remaining legally in the country?
Yeah, once the adjustment of status application, which the primary form is an I-485, is filed, you're legal physically to be here. Whether or not you have employment authorization or international travel privileges, a secondary issue to encounter. But once the EAD comes in and you have that work permit in your hand, it's an open market work permit. It's much better than an H or an L, which is really just for that job with that employer, oftentimes in that location, very restrictive. An EAD is a carte blanche work permit. You could do anything for anybody. I mean, there are always exceptions to, if some DoD jobs require U.S. citizenship. Those are few and far between, but it's just about 99% of all U.S. prospective employment opportunities are going to be available to anyone with an EAD.
Got it. So in other words, once you've filed, if you wanted to quit your H-1B job and take a 3-month vacation, go on a long road trip or something, or just take a vacation or start your own lemonade stand the next day, you could do that. You can do pretty much anything you want. And once you get the green card, then maybe there are a couple other options that open up, but the vast majority, once you have the EAD, which is taking 5 to 6 months or so, you're pretty much open to do anything you want. And one question, if you did want to travel before you got the travel permit, could you do that if you kept your H-1B? Like, if you had an H-1B working for Amazon, you apply and then you don't quit, you keep your job. Can you still travel, or how does that work if the travel card hasn't been approved?
Yeah, as long as you maintain valid H-1B status, you can travel, and that's with that H-1B sponsoring employer. You could switch employers, as Rohit mentioned, but in order to travel without advanced parole, you need to be maintaining valid H-1B status in the U.S.
And the only caveat to that is if you're traveling to a place like India where there are no stamping appointments, well, you need to get stamped before you can re-enter the country. So that's something to be careful of.
Yeah, if the stamp in your passport expired, that's right.
Yeah.
You'll be stranded.
Got it. Okay, great. All right, so let's move on and talk about partial investments, but in the context specifically for the Wahali project. So as we go ahead, Mike.
And one of the things, so to kind of summarize here, it seems like a lot of the reason why we're starting to see the partials is due to the change in the law of the ability to adjust status. That makes it much better to get the application in early because you get that benefit immediately. And then also because the investment amounts to $800,000, there's currency restrictions. You might as well get your place in line, not just for the adjustment of status, but also for the processing timeline to start. But that's just some of the big takeaways. As any investors are listening, that's why we're starting to see more partials than what we used to see, because I'd say historically, the percentage of partial filings was definitely lower than what we're seeing today, primarily because there was not that adjustment of status benefit. And of course, there is more risk with doing partial, just in terms of you don't have all the capital in on day one. So we used to see people waiting to get all the money together versus now where there is a big advantage to filing quickly and adjusting status.
Yep, exactly. And so this slide has a lot of text on it, so we're going to go kind of step by step, and then we'll ask some important questions among the attorneys. So the way we've structured the EB-5 investment in the Wahali project is a very simple, clear 5-year rolling term loan. So what does that mean? That means that when each investor has funded their 800,000, that's the start date of that investor's 5-year loan tranche period. So as we have here, looking at EB-5 investor number 1, this investor's done a partial investment. They funded 400,000 January 1, plus they paid their admin fee, attorney, and USCIS fees, right, in addition to the capital contribution of 400. And then they've waited a year and they funded the remaining 400,000 at the end of the year. So just within the 12-month period. And then once all 800 is there, that is the start period, the start day of the 5-year loan term, right? And there is a 1-year optional developer extension that the developer may or may not extend the loan by 1 additional year, right? And then if we look down at EB-5 investor number 2, we see this investor started the process a little bit later in October. They invested the same 400,000 plus the fees, and they funded earlier. They funded at the end of the year. So only a few months after they made the initial 400,000 in October, they funded the balance 3 months later in December. And so even though that person, started with the initial investment later, the 5-year investment period doesn't trigger until all 800,000 has been fully invested, right? And so that gives investors the flexibility to, fund the balance, fund the delta anytime within that 12-month period to start the 5-year period, right? And we've used $400,000 here as kind of an illustrative number. Thankfully, we do have some flexibility with this project and the developer to adjust that amount depending on how soon the remainder of the 800,000 is going to be funded, right? So for more information on that, please contact us and we can walk you through it. But for illustration purposes, some part of the money is going in at the beginning, and then you have 12 months to fund the rest, and then once the entire amount's funded, that's the start of the 5-year loan. And Mike, do you want to talk a little bit about why we've been able to set up this type of rolling structure for this project, and why this is a good fit for this project versus others?
Absolutely. And one of the unique things here is that this is a single family and residential development deal, which means this is a long-term project. The next 5 to 7 to 10 years, they're going to be building out this neighborhood. So in a typical deal, let's say you're building a hotel or you're building a condo, the developer needs to spend all of their money and typically all of the EB-5 money as well before the senior loan is going to fund. So developers want that money as quickly as possible to come into the deal so that they're able to spend it and then get towards drawing down the senior loan. In this project, because it is a large single family neighborhood, there's a lot of flexibility in the timeline of spend. If there's more money available early, they can construct more amenities, which will push the overall price of lots and homes up. If there's not as much capital available early, they can continue to sell residences, build them, and add more amenities later. And it makes it so that the developer can be extremely flexible in when they take this capital, and they're willing to take a chunk of the money now and a chunk of it later, and it does not negatively impact the project or the capital planning. So we think this is a pretty unique feature that matches single family home developments well. Of course, we've done partials and other people have done partials on other styles of projects, but typically that's not ideal for anybody involved in the project just because of the timing of the funds coming in. When on this deal, it times out well with a development timeline and the ability to throttle development along the way.
Yep, exactly. And so Rohit, I know you've been involved in structuring a lot of different EB-5 investments, many of which have been done as loans. And so one of the things that we really like about this structure is it really treats each investor equally, right? There's no advantage for investors who fund first or investors who fund later in the development of the project. It's pretty consistent in terms of the investment period. And so, yeah, just want to get your thoughts on, why is that different than most projects in terms of their capital needs, and, how just how to evaluate those differences as an investor when you're considering, how long your money is going to remain invested in a project.
So yeah, I mean, for investors, they're going to be investing in the new commercial enterprise, and then the NCE, as it's called, is going to be deploying the capital downstream in the form of a loan, as you just described. Now, in most circumstances, we have a more vertical-oriented development. And so as the capital is coming in, it's getting deployed, and they're usually different periods from which the loan term normally starts. But usually it always ends up being a process where the first case of X value, in certain circumstances, you will have a minimum value that's required by the NCE to deploy under the loan agreement. And so let's say the first 10 million gets deployed, which would be, or make the math easier, the first 8 million, which is 10 investors. And then thereafter, that's when the loan term starts. In your scenario, you are simply doing it on a per investor basis, which actually changes the metric, because rather than being tied with the first 10 investors and having your clock alongside those 10 people, someone who's doing partial or someone who's doing full basically has their own, is charting out their own course. And so depending on where this person is coming from, they're able to essentially navigate what they understand their lock-in period to be. Because it usually, for most investors, this is one question that always comes up. How long do I have to be invested? What are the terms of my investment? And when can I exit? Setting aside the EB-5 requirements that the capital be at risk, and setting aside sort of the amorphous issues of what at risk means, at least in your scenario, there is more clarity of what a loan term looks like and exactly what point is this particular investor, whether number 1, number 10, number 30, they have at least a good eye as, well, it's for the next 5 years, subject to whatever extension may be, but at least I know that it's January 3rd, 2023 is when it starts ticking, and it's done on January 3, 2028 or something.
Got it. Mitch, do you want to, I know you've done a lot of work on projects as well. Obviously, as Rohit mentioned, this isn't a big vertical structure, so we're not really expecting, a big refinancing or sale event that's going to be required to pay the money back. So yeah, just what are your thoughts on that aspect?
Yeah, well, actually, all of my EB-5 work is on behalf of investors. We actually don't do project work, so all my project-related questions I actually ask of Rohit. But this rolling concept, this rolling model, is very easily understood and digestible by EB-5 applicants. So they don't, if they come in the middle of a tranche, they won't have to wait a tranche and a half or so. So it's very predictable. They know when their 5-year clock starts. So it's very understandable, and therefore, a lot more acceptable in the marketplace.
Got it. Anita, what are your thoughts? Obviously, investors want to know, how long their money's going to be there and what happens, and likelihood of getting it back. I guess what have you seen with respect to timing questions from clients?
Yeah, the first question is, how long do I need to remain invested? And as Rohit said, just giving them a measurable amount of time, saying, hey, starting January 1st, 2023, 5 years plus 1 year optional extension is how long you'll remain invested. And clients really appreciate not having to wait for refinance or a sale, because that's really hard to predict with the economic cycle. So I think that they want a tangible answer on when they're getting the funds back.
And this is just a question generally, for all of you, is, for investors who are, saying, hey, I want to do the partial, explore it. What are you guys seeing in terms of, when they think they can fund the balance, right? Or are a lot of clients saying, oh, I need exactly, the most amount of time, to get everything done? Or are most people saying, yeah, I need a few months, to tie up some contracts and, and then I want to fund as soon as I can? What are you kind of seeing, in the last couple of weeks for clients considering now that the rules are updated? Mitch, you want to go first?
Yeah, sure. Well, they usually, right out of the box, they would like to fully fund in as far out as possible until I kind of reel them in a little bit. And then depending on the nature of the project that they're looking at, if they're looking at Wahali or any other rural project, I have to reel them in even tighter because of this, the priority adjudication concept that's yet to be defined. So unless they can really commit to fully funding within 4 to 6 months, I'd say, it's going to be too risky for a rural project, in my opinion.
Got it. Got it. Anita?
Yeah, I agree with what Mitch said. Like I said, I've had an adjudication in 6 months and it's been a problem. What I've been noticing is real estate sales have slowed down significantly. So I've had clients that have listed their homes, they've listed their properties in the US, in India, in Europe, and it's just taking a lot longer to close those properties. The sale prices are down by 20%. So that's why I'm seeing clients that are basically asking for 3 to 6 months of time to make that sale happen.
Got it. Rohit?
So those are the most common, but we also have a number of investors who want to take as much time as they can. And I actually just had a call early this morning where somebody was asking for 1.5 years. And, you know, for all the reasons that have been already laid out, I counseled against it. But you do get that issue from time to time where people want to take their time, and because there's a little bit of hedging. And it's important for investors to understand that once you make the step, you know, this is not a small sort of test your waters or dip your toe and test the water type thing. You need to make somewhat of a substantive investment amount. And usually what I tell clients is, don't make it a token $50,000, right? Make a good, strong investment. Make it clear that you are credibly going to be investing, and then understand that the balance is going to be due pursuant to the terms of the agreement you enter into with the issuer. And if you don't, then of course the governing documents are going to articulate, you know, what exactly is going to happen with your capital. So it's not necessarily nuanced, but you know, investors should fully commit. This is not an opportunity to just try out and then change your mind later.
And on that note about the commitment part, I know Mitch mentioned earlier about, you know, having a promissory note, you know, explaining exactly what, you know, the source and commitment is for the balance of funds that aren't initially funded. We've also seen and used equity commitment letters as well. And yeah, we do have the flexibility to do either a promissory note or a commitment letter for, you know, the balance of the funds. So, okay, with that, I think we're going to shift over and spend a little bit of time talking about some of the details on the project itself, and then wrap up with a couple of with a little bit of a discussion with the panelists about rural projects versus non-rural projects, because I think that'll be helpful for the audience as well. So a little bit quick overview about some of the features and amenities for the Wahali project is here. I'm not going to read every single one. There's a lot of really neat things they've got going on there. Many of them are already under construction and underway. This is a map overview of the project. And you'll see here in the center, this area here in white, this is the kind of central village area. And you see the golf course kind of directly around that. And then you've got yellow on both sides, which are the larger estate lots, which are pretty spectacular. And just having visited this site just the other day in person, what this map kind of fails to illustrate here is this line right here that's kind of right on the edge of these estate lots on the right here. This is a very large cliff. So you've got kind of a valley where the village here is kind of in the center of the valley. And then you've got a spectacular cliff bar view here across. And then this area here is much higher elevation. So when you go up here, you're really looking down into the valley. And so you've got completely different topography here and views, which really kind of give the project the sense that it's kind of in its own world. You can't really see any other homes from the project when you're in this valley, so it's a very interesting. And Mitch, jump in and share your thoughts on that. You just saw it, but
I was just thinking of that ridge as they called it. It's just such an awesome natural feature, and I could just imagine, when it's fully developed, with the with good lighting, it's just it's breathtaking, really.
All right, okay, here's a zoomed in view of the village, and you can see some of the golf holes here and the central area. The practice facility is under development and is almost completed. There's plans to have a solar farm and an organic garden farm area as well, right by the entrance, which is pretty neat. And then the back country, there's a large 3,000 plus acre private reserve, private natural park, essentially. That's a very short ride from the project that residents will have private, unrestricted access with glamping and backpacking, rock climbing, etc. This is another rendering of the center of the village, and here you can kind of see a rendering of that cliff. Not very good resolution in this photo, but that's kind of the idea of what's happening, although it's a little bit more steep in real life. A couple more rendering photos of some of the units. And you can kind of see here at the start of that ridge there on the right-hand side that we were talking about. And then you've got one of the large peaks here, and then this is one of the under construction golf.
And I think one of the things that is really worth highlighting is that this project's been in the works. They've been working on it for nearly 5 years, and construction started in 2020, as Sam mentioned. So there's been over $30 million spent on construction to date, which has created well over 300 jobs. So lots of job creation already occurring for those early investors, and much more to come. And what we really like about this deal is that the developers have invested their own capital and equity capital along the way. And several months ago, they did secure a senior facility from one of the largest private single home lenders in the country, Builders Capital, where they're able to draw. So we're coming into this project after it is fully baked in terms of it's moving forward with the capital in place, but it is still early enough on where there's a very long runway where you know exactly where the money is going to be invested for the duration of your EB-5 investment. And as you can see on this map, it's located right outside of Park City, relatively close to many of the world famous amenities, including where they hosted the Olympics years ago, and all the mountains around. And really, it's a very tourist driven area, many people with second homes. And since the pandemic started, many people have chosen to call Park City and the surrounding area home rather than some of the coastal cities.
And Mike, about 40 minutes from the airport, right?
Exactly. Really easy to get to the airport.
And I like that one of the greens, Sam, I like that one of the greens is already on. It's green, so you can actually see the beginning of the transformation.
Exactly. Yeah, the grass there is amazing. We've got a few other pictures from the visit too that we can share. And they have an amazing on-site sales team. Oni is the head of their sales team there, and he's been in Park City for many years and has already bought a lot himself in the project, and is extremely familiar with all the details, and is going to help with tours for future visits with us as well. This is a map of some of the on-site sales office here on the bottom left and right, and then a couple of the other Sotheby's offices just in and around Park City. Capital stack, Mike, do you want to walk us through the capital stack quickly?
Yes, and with any single family home deal, this is one of the hardest pieces of the deal to kind of visualize, because in a deal like this, you're going to have a large amount of capital spent on this section of the project, about $430 million, with additional spend coming after the EB-5 period. But during the time, capital keeps going up and down as homes are built and sold and built and sold. And that's where you see some of the information here, such as the recycled capital. So going around the the pie chart. So the senior loan facility is up to $50 million. And that's, as I mentioned, with Builders Capital, a very large lender that focuses on these type of single family home developments. And this is a revolver. So this will be used to construct the townhomes and homes and can be drawn upon to do all of the vertical construction and a lot of the infrastructure work as well. There's going to be up to 99 in EB-5 investors, or 79.2 million. And this helps to push forward the horizontal development in the project, the amenities, and just speeds up the entire process of the build. And the developer equity category. So this is where they've already invested about $30 million of equity. But in addition to that, when you build these homes, there is a profit margin on each home, and you are able to reinvest that money into the project, or you can distribute it out. So typically on a deal like this, you continue to reinvest the capital until you hit peak equity. And then after that point in time, the proceeds are taken out as profit in the deal. So that's all fits into this developer equity, because profits on the home sales are reinvested in the deal until peak equity is reached. And then the last category, the recycled capital, this is where we're drawing up and down on the revolver to build many of the village units, the townhomes in the project. And although the senior loan is $50 million, much more than that is going to be drawn over time and repaid as you get closings on these homes. So anytime you're looking at a deal with single family homes, it's really important to note how much actual equity is put in from the developer, how it's all going to work, and how those recycled proceeds are going to work. But I'd say that the key thing to look at here is it's almost $430 million of spend that's going into this project. So in terms of job creation, there is very significant job creation, and this is a long duration project, which can flex with the economy. So if things are going well and the economy is strong, many more homes will be sold. And if things go slow and you're in an economic downturn, which could be happening right now, you are able to continue the project and slow the pace of construction to meet the demand. And that is one of those really unique things about a single family home deal, is the ability to match the economic cycle and where you're at in it and make it through to the end of the project, even if you go through a recession.
Got it. Thank you, Mike. That's super helpful. And we do have a couple of articles on our website that talk about, best and worst asset classes for EB-5 investments, and another article specifically about the Wahali project as a rural project. So definitely check those out on our blog to give you some more context for, what questions to ask and consider when you're selecting a project. This is a quick photo of the executed senior loan from Builders Capital. A little map showing the primary development land of the project here in the backcountry natural reserve that we talked about earlier. And Mike, you want to talk a little bit as well about the ongoing collateral compliance for the project with respect to each loan tranche?
Mm-hmm. Yeah, and this is another important point, is what is the actual collateral on the project. So first of all, we have a senior mortgage position on any piece parcel that Builders Capital does not, and then we're in second priority behind them. And as noted, their money is really only being drawn on vertical construction and then is repaid. So it's only under construction units. So after that, we have the entire project as our collateral in the event of a default. And then separately, to maintain compliance, the developer and project always needs to maintain at least 150% LTV. So what that means is that you take whatever the value is of the assets. So we'll have an appraisal of any finished lots, unfinished buildings. You get the total value of what the project is today. You subtract out any of the revolver and the senior debt, and then what's left, that's our collateral, and that has to maintain 150% of the actual drawn amount of the EB-5 loan. So as you go further and further down a single family home deal, this helps to make sure that you stay in compliance of always having plenty of collateral. And we think that this is a best in industry feature of having such a large 150% LTV test.
Got it. That makes sense. Okay, so to summarize, whenever we're looking at an EB-5 project, we're always looking at two things, right? Immigration and financial safety, right? So immigration side first, right? We want to see a project that's fully funded, jobs are going to get created, and there's sufficient job creation. We only need to create 10 jobs. This project, when fully developed over the next 5 to 6 years, we expect 44 jobs per investor with a job creation guarantee from the development company. Construction's already underway, over 300 jobs already created as of last month. And then on the financial side, as we talked about, we have a structure with a secured EB-5 loan investment broken down with individual simple 5-year loan tranches, strong sales to date already for lots in the project so far. We have an I-5260 approval refund guarantee. So if your I-5260 isn't approved for any reason, you can get your capital back sooner. And then most importantly here, ongoing LTV test. So we check exactly what collateral is remaining during the term of the loan to make sure that at the end of the loan that there's sufficient assets there and collateral to repay the $800,000 amount in full, right? And since we're completely independent from this developer, that is a really important feature to have, right? You'll see many projects where it's the development company themselves that's acting as the regional center or the lender of the funds, and that creates a large conflict of interest. This is just we can skip over this quick breakdown of how the job creation works out. 4,400 jobs, and jobs to date, we're more than 300 jobs already as of last month, 990 total, and at the end we'll have about 4,400. Okay, so one of the questions we always get is, I've heard rural is going to be a little bit faster, and there's this visa set aside thing, but it's a rural area, and I'm not sure if my money's going to be safe versus going into a more traditional large hotel or condominium project in a more dense area. So can you guys kind of simplify the decision framework for some clients who are really considering doing a rural project or not, and what's the type of investor, what profile of investor is a rural project really the best option, and then what's the profile of an investor who it's a good option but may not necessarily be the best one based on their goals and preferences. And for that one, maybe Rohit, do you want to start with that?
Sure. So like any project, not all rural projects are created alike. And it's incredibly important for each investor to review the asset class, review the projections, review the team that would be working on it, who the issuers, who the developer are, is what the terms of the underlying EB-5 loan is, whether or not the capital stack is fulfilled. So all the general business decisions that anybody will make before making an investment, those are obviously incredibly important to first do. Secondarily, there is a clear-cut line here in that Congress has created, as a result of the 2022 EB-5 Reform Integrity Act, that rural projects have priority. Now, as you look at the market, and I'm coming in from the project perspective, a lot of groups, regional centers, issuers are looking for rural projects. We've seen some on the market that look compelling and some not so compelling. And so as the investor is looking through that and making a decision, the key here is timing. If USCIS is in fact going to follow the law, which we all expect it will, and will adjudicate 526Es on a priority basis, then for those investors that are here in the United States on a non-immigrant visa, this is an important thing to consider because it gets you in quicker. It also, quicken your pace for the ultimate green card, not just the adjustment. For those that are outside of the country, a little bit of planning needs to happen. Not every investor, interestingly enough, is looking to move here quickly. We've had certain investors who have kids who are fairly young and are young in their careers themselves and don't want to move here. They just want to plant the seed and get their line in queue. For those who would prefer to be here sooner, this is certainly the path to follow. Because as I look at it, given the total number of applications outstanding on 526s, given the total projected number of 526Es that are going to be filed in the coming months. The sooner someone gets in line in a rural project, the faster their I-526E is going to be approved, or adjudicated rather.
Got it. Got it. Anita, what are your thoughts? I know a lot of your clients, are Indian, but many of them are not in India and have different preferences for when they want to come to the US. So how do you kind of, decide, okay, you should be looking at a rural project because A, B, and C?
Yes, we've had a bunch of clients that are here on H-1B that have kids that are about to age out, and they've been waiting in the EB-2 line for 15, 20 years. We've seen those cases with the Child Status Protection Act, where clients that are particularly born in India or Vietnam or China, we are recommending that if you're within 1 year or 18 months of aging out, we're recommending a rural project just so that retrogression may not impact them. That being said, the question I keep getting asked is, how do I know if I made the 20% set aside? Those questions are largely unanswered because we're waiting for USCIS to give us some guidance. But the major issue I've seen is the Child Status Protection Act, where kids are about to age out, and we're definitely recommending rural to Indian, Vietnamese, Chinese clients.
And Mitch, what are your thoughts when clients, come to you and say, Mitch, I've read all these articles about how rural is better. Is it really worth it for me? And and what should I consider if I'm really serious about looking at a rural project, notwithstanding doing the partial investment or not?
Yeah, for those that where speed is the paramount consideration in the calculus, rural is probably going to be the best way to go because of the priority adjudication component to it. Now, there's a school of thought that says, well, if it's rural for a reason. There's no one there. If there's no one there, there's no customers. So you have to be really very careful in doing your due diligence in picking a less unsafe rural project. So if it's retail, if it's hospitality, probably more risky than residential, but that's on a geography by geography basis. So I say the driving factor in the calculus would be need for speed for rural.
Got it. Okay, great. All right, we got time for just a couple questions, and then we'll then we'll wrap it up. So one of the questions we got is about EADs being issued recently and the timing. I know we heard Rohit, I think you mentioned 3 to 4 months, Mitch 7, 8. And is there any priority or premium processing for the EAD? Rohit, do you want to talk a little bit about that?
Sure. And just to be clear, 3 to 4. The fastest I've seen is 3 months, but the majority of what I'm seeing outside of that is still in the 6-month time frame. But in terms of priority on the EAD, they are hard to get. Certainly USCIS did come out and mention, I believe it was in February sometime, that they were prioritizing the EADs and trying to get those out the door, which is part of the reason why we've unbuckled away from the combo card. Mm-hmm. But where we've seen priority been given on EAD usually comes about depending on the person's profession and whether or not they meet certain expedite criteria. So that's been the only circumstance where I've seen that come through. Otherwise, most people are still relegated to the average processing, which, for USCIS's credit, to their credit rather, they have picked up the pace.
Got it. Okay, great. That's really helpful. One other question we got is, can my capital investment in the project be converted into a piece of property in the project? Mitch, do you want to talk about why that is a no-no?
Yeah, it's just no. But if I could go back to the last point, Sam.
Yeah.
So there's on the EAD, it was initially asked if it could be premium process. So there's some application types whereby if you pay $2,500 to CIS, they adjudicate in 2 weeks. EADs is not one of those, but as Rohit alluded to, there's an opportunity to request expedited adjudication. It's granted very sparingly if there's significant humanitarian reason or financial reason, if your employer it stands to lose a significant amount of money. So it's rare and granted few and far between, but that's really the only chance to get out of the normal, let's call it a 6-month turnaround for an EAD.
Got it. Okay, Anita, question for you. Canadian investors on TN visa, they do a partial investment, they file for their adjustment, and a few months goes by, and then their TN is about to expire, but they still haven't gotten their EAD. Can they still apply for a TN extension while waiting so they can keep working, or can they not apply for the TN extension and they just have to wait until they get their EAD?
That's a great question because we get that from E2 holders as well as TN holders. And my answer to that is you can apply, but at this point, by applying for the EB-5 and the 485, you've exhibited immigrant intent. So it's unlikely that you will be approved. And Rohit, Mitch, feel free to jump in. That has been my opinion.
Yeah, same. You clearly expressed your immigrant intent, and a TN is a purely non-immigrant status without the dual intent feature that H's and L's do. But you can apply, and we've seen them approved most of the time, but there's certainly a risk in that.
Agreed.
Got it. Okay, so possible, but no guarantee that it's going to work. And if it doesn't work, then you'd have to wait. You'd still be able to remain legally, but you'd have to wait until the EAD came in before you could legally work.
Right, and that's something that I wouldn't premium process because you can premium process a TN,
Yes.
A status extension here. So if you don't premium process, it effectively gets extended until it's adjudicated. So you're in no rush for that answer.
Right. Yep. Makes sense. Okay, great. Yeah, I think I don't want to take any more of everyone's time. Thank you all for taking time to join the webinar. And just to wrap up, I just want to emphasize that before an investor can start the EB-5 process, either the partial process for Wahali or the full 800,000 for another project, our Saltaire project, or any other EB-5 project, you have to first select an EB-5 immigration attorney to work with to document your source of funds, right? That's step one before you can finalize which project you want to go into. And I can't think of any 3 more professional, ethical, and hardworking EB-5 attorneys than we have here with us today. So if you are, really considering doing an EB-5 investment, please reach out to them, and you should always chat, with more than one attorney before you make a decision. While I have full confidence with each of them, personalities, languages, differ case to case. So yeah, you just want to make sure that you're jumping in bed with the right person, because this is a long-term process. This is not just pay once and then never hear from them again. This is going to be your advocate and the person you're going to be working closely with over the next 5 to 6 year period, right? So you want to make sure you've done your homework and really understand how it's going to look. And with that, I'll let Rohit, Mitch, and Anita just closing thoughts on the partial and just on general EB-5 advice to investors now that the rules are back open.
So I'll kick this off, Sam. You mentioned 3 ethical, and I forget what other sort of personality traits you were just describing. Anita qualifies for that. I don't know about Mitch and me. So,
ethical, hardworking, and responsive.
And good looking.
Yeah, fair enough. So there's only one person on this team. So Mitch, you and I are out of luck here. But my closing remarks on this is, look, this is This is a great time for EB-5. We have a lot to celebrate outside of the 5-year reauthorization. We have a clearer line of sight following the settlement on the litigation that just passed, which we haven't really discussed, but it's a good thing. And there are projects coming to market. EB-5 is in high demand. USCIS, Congress, Department of Homeland Security have all prioritized the program. So this is a great opportunity to examine investor interest. And so for those who are ready, this is something to explore to the extent you're capable, available, and have the capital. But just be aware that it is a long process in terms
of. We're losing Rohit.
Yeah.
We lost you there at last second, Rohit. Go ahead.
Oh, yeah, sorry. So it is a long process in terms of getting your capital aligned and working with your attorney and getting your source of funds done. The only main advice I have to leave you guys with is, as Sam indicated, start working with your attorney up front. Do not liquidate or transfer any funds until your attorney has signed off. That's extremely important. Sometimes we come to cases where the client's already taken all the action, and if we're trying to unravel what they've done, it ends up being far too complicated or something we're not going to be able to do. So start with the attorney, get it all taken care of properly, and then press ahead.
And to that point, Rohit, we've encountered some agent types around the world that think they're, and most of the time they are quite helpful, but sometimes they jump into the source and path of funds exercise with a view towards delivering a largely finished product to the attorney, and it's a problem. So I agree with Rohit to work with an EB-5 attorney to set and establish the source and path of funds strategy. 2 closing points that I have, just speaking to the partial investment piece. Equity in the project can't be used to collateralize or to secure the promissory note, number 1. And number 2, once it's decided that EB-5 makes sense for the applicant and his or her family, again, start on the source of funds piece, because that's the heavy lift. You'll find a project within the several months. Usually takes 2 or 3 months to put a good package together. So start on the source of funds exercise. That's the heavy lift once again. And during that time, concurrently, you'll be vetting different projects, and you'll find one to your liking. But once you're kind of emotionally and financially settled on the fact of an EB-5 application, jump into the source of funds piece. Anaida?
Yeah, I think there's no better time. Been in the EB-5 game for close to a decade. I think the transparency that this new program brings is incredible. The guardrails that are now with the program, the disclosures that are required, the audits that are required, I think do a better job of protecting the investor than the previous regs did. And I think that the work permit is incredibly helpful. My clients now are seeing it with the loss of jobs, with layoffs, and I agree with both the attorneys that please do not liquidate before hiring an attorney. Don't put your funds in place. You can concurrently find a project and do source of funds, but hiring an immigration attorney must be your top priority. I would focus on the attorney's profile, what countries they deal with, especially with the complicated countries like India, China, Vietnam, and just do your homework before investing.
Mike, do you have any other thoughts before we wrap it up?
No, just really want to thank everybody for their time. Thank our guests for giving all of their insight into partial filings and just EB-5 in general, and would recommend that anyone interested in EB-5 and moving forward, please reach out to us and any of the panelists, and hope to hear from you soon.
Yep, as Mike mentioned, yeah, Mike and I are available to answer questions and talk about the projects. We're deeply involved in the structuring, the assembly of the paperwork, so we'll be able to answer any questions better than anyone else. So please don't hesitate to reach out, and we're also happy to connect you directly with Mitch, Rohit, or Anita as well. And their contact info is on the screen. So thank you again, everybody, for joining. And yeah, we look forward to being in touch. And thank you, Mitch, Rohit, and Anita for taking time today.
Thank you.
Pleasure, guys.
Yep, thanks.
Bye.